Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer, Brian Johnson, making professional trading simple. Got a little bit of move to the markets today, but right back into support. So we're still within the trading range. I had mentioned some of the support levels I was watching. The first one I said was about 10,250. Second one being 10,200 that I wanted to see us break and ultimately close below. Look at the low for today, 10,249.84. So 250, 10,250 holding very nicely on the Dow today. And the market's down overall 1% for the Dow, the S&P, but the Nasdaq only down 0.75%. So I guess if you want to call that a little bit stronger, it was overall was a little bit stronger than the overall markets. But if we go back here to the Dow, you can see still in that trading range, still moving sideways, right back into support. We've had a test of it once, twice, three, four, five, about six times now on the 60-minute chart. No reason to think that it won't continue to hold. What would be the best way for the bears to break this? Gap below it. Gap below it. I don't know if we'll get that or not, but that would obviously be the easiest way to get below this area of support and finally maybe break it for good. Let's see if the bears take their opportunity when they get it. The bulls have had time to break this upper resistance and they couldn't hold above it. Let's see if the bears get an opportunity to break below this and hold. So we'll be watching this very closely. Now we're back to support. So defensible place to get long with a very small stop right below this thing. Or you can wait for a breakdown, but I'm really looking for a break, not just below 10,250, but really a break below 10,200. That's the larger. You can see that's below the 200 period moving average on the 60-minute and below this previous heavier support line down here. If we look at it on a daily, you can see it pretty clearly here too. The big green line, the big green monster, is what we're looking to break down below. In the short term for the bears, that would take it out of this trading range. And it's not just a break below it, it's a close below it. So even if we break below this 10,250 and then ultimately 10,200, be very careful. I'm not saying don't go short. I'm just saying be careful with your first immediate short because we've seen a lot of head fakes up here as we broke resistance. Maybe we'll see head fakes down here as we break support. Just want to be cautious with your trade. The NASDAQ on a 60-minute. This one here just still kind of trapped between support and resistance. You can see it with the gap down today, pulling all the way back up into the moving averages and moving back down into support at the 1770 area. A little cleaner here on the daily, I think. As you can see, we tried to break into this this rising wedge again, was not able to do it a few days back. Then we came down to test this support line, and now we're below it. And this is how they beat it. Notice how the bears gap below it, and on a retest, it held. Now we're back to being below this particular support resistance area. So now what was support is now becoming resistance. Kind of interesting how that works. Gaps work very well for one party or the other. NASDAQ on a weekly, still basing sideways. It's only Tuesday. We'll let that go a couple more days before we really start taking a closer look at it. SPX was a curious one as well. Big breakdown here today. All the way back down to the 1090 area. I had sent out a quick email to my subscribers telling them about the 1085 level, which we've been watching for a while. And just as I sent it out, we were kind of breaking down at the time, and I thought, I better get this out quick. And then, of course, I sent it out, and it flatlined the rest of the day, so it didn't go anywhere. But this here, 1090, you can see right back to a support area, and that's holding very, very nicely today. This 1085 is, of course, the bigger, stronger area I'm really looking at, as is the 10200 on the Dow. Those kind of go hand in hand with one another at this level here. Don't know if I really have one for the NASDAQ as of right now, so I'm really focusing more on these levels for the Dow and for the S&P. Below 1085, I really think our next level is going to be that larger, more ominous 1075 area. That'll should prove to be a pretty big test for the bears to get below. So below 1085 takes us out of this little trading range we've been in. Below 1075 gets us below this bigger green monster here on the SPX. And then I think the next test below that is this lower channel line. Now, before I get too far into the bear camp, we have to keep in mind that this trading range has held extremely well the last month or so. I have no reason to believe that it won't work again this time. Until it closes below it or breaks below it in a really, hard, quick manner, heavy selling pressure comes in, I have to give my bias to what the market's been giving me, and that's this trading range that we've been in has held, and I believe that it will hold for the time. I believe that it'll hold this time as well. I have no reason not to think it won't. So while I am cautioning you against going short at the 1085 level, I'm not telling you not to do it. Just saying a break below 1085, keep your stops tight. I would go in expecting a head fake. I would go in expecting the trade to go against you. And that way, if the trade continues down below 1084, 1080 and on, then it's just a pleasant surprise. And it's not a huge, upsetting, emotional trade if it turns around and goes the other way. So get in below 1085 if it even happens to do that. I don't even know if we'll break that level, but if it breaks 1085 and you go short, expect it to head fake. Keep your stops tight in that respect. I still, until this trading range is broken, I still like looking at equities for my trades right now. They're just moving a little bit more uniform. SPX on a weekly, yeah, whatever. It's only Tuesday. Now the VIX was up a little bit today, so that's good. That's confirming the move that we saw. Still below all of this, overhead support. And every time we see this thing move up, it gets drugged right back down again. Drug, is that a word? Well, it is, but I think it's dragged, maybe. Anyway, it gets dragged right back down again. So still the fear is not returning in a big way to the markets as of yet. We did see a nice move up today. Same thing here. It's still trapped below all of this resistance here. We're just messing around lately with the 200, the 20, this previous support line, back and forth, up and down. Really what that tells me is that there isn't a large amount of fear that's pouring into the markets as of yet. So, from the option side of things, there's no real fear entering the market here. Apple on a 60-minute, of course, markets are down.